House prices have skyrocketed in recent years, especially in wealthy nations like Canada, the United States, and Australia. It's crazy. Home values have soared way faster than everything else. Interest rates have shot up, and home prices just keep climbing. It feels like owning a home is becoming a distant dream for most of us. In fact, prices have more than doubled in just 2 years. With mortgage rates at a 22-year high, it makes you wonder, if ordinary people can't afford to buy, then who's snapping up all these homes? The pandemic has cast a long shadow over housing affordability in Western nations. Countries like Australia and Canada have seen a particularly stark deterioration, with skyrocketing house prices and rents coupled with a soaring cost of living. This perfect storm has made homeownership an increasingly distant dream for many, transforming it from a viable financial goal into a seemingly insurmountable challenge. A fundamental question emerges. If property prices continue their relentless ascent, who will be left to purchase these increasingly expensive homes? Let's talk further about this pressing issue, and also see the potential endgame of a housing market seemingly detached from reality. The problem is multifaceted. Not only young people, but individuals across all age groups are finding themselves locked out of the property market. A paradoxical situation has developed. House prices surge despite a declining pool of potential buyers. This begs the question, what is driving this upward trajectory? Traditionally, buying a home early in life has been a recipe for financial success. Ideally, young people start making mortgage payments early on. This allows them to benefit from lower payments later in life, freeing up money to save and invest for retirement. However, the dream of early homeownership is increasingly out of reach due to the chronic housing shortage. Countries like the United States, Canada, and Australia have been underbuilding homes for decades. This supply-demand imbalance has directly contributed to soaring prices. With fewer homes available, buyers are competing fiercely for limited inventory, pushing prices to new heights. And now, the skyrocketing cost of housing has priced many out of the market altogether. Stuck in rentals, they are forced to grapple with ever-increasing rent payments, leaving them with little to save for their golden years. This situation begs a critical question. If homes are becoming increasingly unaffordable, how can prices keep rising? In a typical market, a decline in buyers would lead to lower prices. But the housing market operates differently. Here, powerful groups are determined to prop up prices. One way they achieve this is by creating schemes that bypass the traditional 20% down payment requirement. For instance, in Australia, the government's Family Home Guarantee allows homeownership with as little as a 2% down payment. While such schemes might seem helpful for first-time buyers, they have the unintended consequence of pushing prices even higher. In a free market, unaffordable homes would simply not sell. Prices would adjust to meet buyer demand. However, governments often prioritize economic growth over affordability. Rising house prices are seen as a way to stimulate the economy. This is because increased debt allows people to spend more. Additionally, rising home values make people feel wealthier, further encouraging borrowing and spending. This cycle benefits the banking system as well. Countries like Canada and Australia have high household debt levels. Banks are comfortable lending more because they are confident that property prices will continue to rise. As long as prices climb, a few loan defaults are not a major concern. The property can always be sold at a profit. However, this house of cards is built on shaky ground. A significant drop in housing prices would be disastrous for banks and the entire economy. This is the reason why governments, despite expressing a desire for affordability, often take actions that inflate the housing bubble. Finally, if the average person can't afford a home, who exactly is buying them? The answer: cash buyers who have profited from selling their previous homes and are looking to upgrade. So, while many are struggling to afford a home, A select few are benefiting immensely from the current market conditions. One group consists of long-time homeowners, often referred to as boomers, who purchased their properties decades ago at significantly lower prices. With a desire to downsize and substantial equity built up over the years, they are in an ideal position to capitalize on today's inflated market. These homeowners have essentially won a real estate lottery, thanks in part to pandemic-era policies that supercharged housing prices. Another key player in this dynamic is the migration of people from expensive urban centers to more affordable regions. Cities like San Francisco, Seattle, New York, Sydney, and Toronto have become prohibitively costly for many, forcing residents to seek more affordable housing elsewhere. This exodus creates a dual impact. It relieves pressure on the overheated original market while simultaneously inflating prices in the destination cities. For instance, Australian cities like Adelaide and Brisbane, once considered relatively affordable, have experienced rapid price increases as they absorb newcomers from Sydney and Melbourne. Investors are the third major force shaping the housing market. Despite high interest rates, they continue to purchase properties with the expectation of strong rental returns. While their borrowing costs have increased, so too have their rental income. This dynamic allows them to maintain profitability while contributing to the overall upward pressure on housing prices. In addition to the groups already discussed, investors and foreign buyers are significantly influencing the housing market. Property investment has become a national pastime in countries like Australia, Canada, and New Zealand, fueled by the expectation of consistent price appreciation. Government policies and central bank actions have inadvertently encouraged this speculative behavior. Foreign investors, particularly those from China, have played a substantial role in driving up prices. Their deep pockets allow them to outbid local buyers, further exacerbating the affordability crisis. Wealthy immigrants are another influential group. Countries like Australia and Canada have experienced a surge in immigration, with many newcomers possessing significant financial resources. This influx of wealthy individuals intensifies competition for limited housing supply, pushing prices upward. Another critical factor exacerbating the housing affordability crisis is the pronounced shift in home construction trends. Historically, the real estate market catered to a diverse range of buyers, including first-time homeowners, with a variety of affordable housing options. However, in recent years, there has been a conspicuous inclination towards developing larger, more opulent homes, often characterized by expansive square footage, high-end amenities, and premium finishes. This transformation in the housing landscape has inadvertently curtailed the supply of starter homes, thereby imposing significant challenges for young people and families seeking to enter the property market. The dearth of affordable housing options has intensified competition among potential buyers, driving property prices to unprecedented heights. Moreover, the construction of larger homes often necessitates greater land area, contributing to urban sprawl and increased infrastructure costs. These factors collectively compound the affordability issue, rendering home ownership an increasingly elusive goal for many. The long-term implications of these trends are a subject of growing concern. Some speculate that the increasing unaffordability of housing is a deliberate strategy to usher in a future where individuals have minimal asset ownership. While the extent to which this is intentional remains unclear, the juxtaposition of severe housing shortages and continued high immigration levels raises questions about the underlying motivations of policymakers. The trajectory of housing markets in Western nations is shaping up to be a defining issue of our time. If the current trend of outpacing wage growth continues, a stark societal divide looms. A growing segment of the population will be permanently locked out of home ownership, trapped in a cycle of rising rents and financial instability. This scenario could fuel widespread discontent and social unrest as the gap between property owners and renters widens. Governments will face immense pressure to address the plight of a population unable to afford housing in retirement. The prospect of mass homelessness or a return to shared living arrangements is a grim reality. Conversely, a sharp decline in property values is equally catastrophic. The immense wealth tied up in real estate would evaporate, triggering a domino effect of economic collapse. Consumer spending would plummet, businesses would shutter, and unemployment would soar, plunging economies into a deep recession. The housing market stands at a precipice. The path forward is uncertain, clouded by the potential for both societal upheaval and economic disaster. While some believe that a deliberate plan is underway to reshape the global financial system, the reality is that the situation is complex and multifaceted. Regardless of the underlying causes, the consequences of either scenario are profound. The housing crisis is a hard issue with far-reaching implications. Its outcome will shape the future of our societies. It's important to stay informed about everything happening. If you found this analysis insightful, please hit that like button and share it with your friends. And don't forget to subscribe to my channel for more in-depth discussions on finance and economics. Your support helps me continue to bring you informative content. Thank you for watching, and we'll see you in the next video.